Traders, Cousin Vinny coming to you from theclosingprint.com, June the 6th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher near all-time highs, with international markets resuming their trends. The FANG stocks we follow all moved higher with the exception of Amazon, Netflix, Roku, and Tesla, as growth stocks outperformed value to end the week. The heat maps are improving for both the S&P 500 spider sectors as well as international markets. In addition, we'll look at these IBD 50 names. Those with green are stocks on the move from the Investors Business Daily scans, and stocks in cyan are from the Blue Dot scan. CanSlim names all look pretty good here as well. Bukowski's got 5 of 5 green with the CPI signal green since the end of May. It's bullish with 5 bearish patterns, 14 bullish patterns, and 259 patterns waiting for breakout. We have 15 bullish signals this week with 4 neutral and 1 bearish, with the S&P 500 4200 support. 4160 is a flip point. That's absolute support that needs to hold. And we have 4250 potentially being tested this week, while many commentators are pointing out a potential double top on the S&P. Spider's Renko chart shows us continuing these white bricks, looking for a follow-through this week and a test of 4250, perhaps a grind higher, given the material increase in positive gamma we saw last week and the call wall rolling up from 4200 to 4250 for the S&P 500, 420 to 425 for the spiders, as we updated in the gamma channel. However, we do see this double top or triple top, if you will, that many traders are looking at, with a potential test of the 50-day removed now that we pushed off of the 21-day. As RSI continues higher, we're moving it into an area where there is very little overhead supply. A push above the recent highs would forecast the test of 425 or 4250 on the S&P 500. We also saw volume increase on Friday. MACD's above its signal line, though it's slightly flat. Stochastics rising, and ATR is starting to change direction, with the large cap tech stocks helping. Last week on Friday, we saw value underperform growth, as we can see this line rising. The chart of growth versus value in the lower panel, growth pushing off the 21-day moving average. There's still room to the upside for a break above these pivots that we put in last week. So that could help fuel the breakout in the S&P 500, because these 15 stocks make up more than 56% of the weight of the NASDAQ 100. And the top 7 make up more than 23% of the weight of the spiders and the S&P 500. The flip side is also the case. If we see weakness in tech and semiconductors this week, that could impart a headwind on the markets in general, so we'll watch for that first thing on Monday. We can also remove the weight by looking at the S&P Equal Weight Index, which is continuing along a grinding path to the upside, leaving us more bullish to neutral going into the week, with the number of stocks trading above their 50-day moving average down near 70%, would give us more energy for the upside move if that were to happen this week into one of the seasonally strongest months of the year, averaging about 2% and then about 4% for July. Average monthly gains taking over the last 5 years in the months of June and July. And if we include the mid caps and small caps, we can see the S&P 1500 composite is still on a bullish signal, trending. Green is above red. Histogram bars are decidedly bullish, and price action is in the upper half of the Bollinger Bands for the S&P 1500 going into this week, finishing on a green elder stick on Friday. We can also look at the S&P 500 advanced decline line, the mid caps and the small caps in the lower panel. All of them are making higher highs and higher lows, pulling away from the 200-day moving average. Obviously, we could pull in, so there is no guarantee that breadth will continue to improve. So we want to make sure that we check the advanced decline percent of these individual groups, S&P 500, S&P mid caps, small caps, and the NASDAQ, all moving higher off of the zero line and trending, suggesting breadth is improving, while the NASDAQ composite McClellan oscillator also gives us higher highs and higher lows this week. Again, starting off with the potential rise above these pivots that we saw right here at 13,750, looking for a break higher before getting to overbought and 52-week highs. In addition to what we saw last week on the New York Stock Exchange, 2,700 stocks, a broad measure of market participation, also giving us a higher low, looking for a higher high. Note the trough in the black moving average, which gives us an indication that we could see follow through, while the NIMO in the background, the dark gray, would potentially push higher, though it could push a little bit lower and still be in a bullish trend. So with this in mind, we're looking for other indicators to give us more of an edge. We can see VIX is still on a green signal to start the week on the 60-minute time frame, while the daily remains below the 50-day moving average and trending lower. A linear regression line through the past year and a half would still give us a downward bias in VIX. We can also see with the New York Stock Exchange composite, removing candles or price action and just looking at the 50 and 200-day moving averages, that there's no inclination of a change in direction at present, similar to what we saw, which gave us a couple of weeks of warning, if you will, back in 2018 when the president raised tariffs on washing machines and solar, while at the end of the year we had the Fed raising rates too soon. We got a peak and then a crossover a few months later, so we would have missed a fairly large drawdown with a golden cross most recently in September, giving us the current bullish follow-through as we trade near highs. Now this could change direction, but it would take several weeks to see a peak in the 50-day moving average. Further, if we add a few moving averages to the signal, we can see this looks nothing like February of last year or 2018. It looks more like the trend that we saw in 2017, albeit at a steeper slope. In addition, if we look at the number of new highs minus new lows during the same periods, end of 2018, February of 2020, we can see that the number of new highs versus new lows looks nothing like those two periods where we had these sell-offs in the markets. So at a bare minimum, we'd want to see this black line, the moving average of these values, turning lower and dropping below the zero line like it did in previous occurrences. We also saw the 30, 20, and 10-year yields fading over the last several weeks, which tells us to keep an eye on the bond-stock ratio in the short term. This is a weekly chart. Watching this ratio at the lows could mean revert back to the 65-period weekly moving average. As we can see with the 20-year bond, TLT, beginning to test the upper part of this range, could move into the Kirby, so this might be a nice bullish setup on the daily time frame, whereas the weekly time frame is showing us a very similar bias that we could be changing direction and moving above these volume by price bands, which would impart a tailwind in the markets for the 20-year bond. as an example, whereas we do have the 7-10 year also showing similar price action, as well as LQD, investment grade corporate bonds. While junk bonds and high yield corporate debt give us no reason to panic at the moment, trading in the upper half of Bollinger Bands, they're tight, trading at highs. Higher is bullish for equities, lower would be bearish. With these assets typically leading the markets on breakouts and breakdowns, as you can see back here in February of 2020. So it'll be even more important to keep an eye on the US dollar and commodities as the US dollar starts to bounce. It could impart a headwind into some of the international markets, which have been gaining lately. With a higher dollar, we could also see gold prices pull in a little further, retest this breakout zone potentially. We did see buyers step up on Friday, while other industrial and construction related metals faded further. We got copper in a descending channel. We're looking for a break to the upside. That would be bullish for equities, specifically for construction related names and builders. Together with crude oil, in this case with Brent, looks like it could break out above the $71 a barrel mark. Multiple levels along here, which could forecast a test of recent highs that we saw back in 2018 when it was $86 a barrel. And finally, the CRB index, which is reflecting the weakness in the US dollar, but also telling us that global economic recovery is more synchronized as this continues to move higher, almost a beeline from 2020, continues higher on this monthly time frame. This would be bullish for economic activity if this continues higher. The S&P 500 spider sectors and subsectors are looking better. Energy names looking good. Real estate REITs also improved, along with semiconductors, internet, and technology related names. We really need to see these sectors continue this week, as we spoke about previously, while we watch for international markets to continue their improvement as well. We'd also like to see sectors improving. Energy is at highs along with real estate, showing strength last week in addition to what we saw with financials. Industrials did fairly well. So did the communications services sector with streaming and Facebook and other names in the group improving along with technology. So we'll look for these sectors to follow through and remain above their 21-day moving average, while we look for consumer discretionary to improve along with economies opening up, both domestic and international. Looking at the IBD 50, some of the stocks that were on previous watch lists, in this case, QFin, 360, Digitech, about to break out of this base. Volume indicating institutions have been picking up shares. MACD is above the signal line. Stochastic is embedded. Check your favorite semiconductor stocks. Many of them look very strong. There are nice trends. RSI is above 50, like ASML, looking for a follow through. Google looking pretty strong. Looks like it's going to break out as well, as advertisers for both Google and Facebook showing bullish trends in spending. Charles River Labs looking for a follow through. CRL pushing off the 21-day last week. RSI above 50. Watching for volume. MACD above its signal line, rising. A lot of the steel stocks looking good this week. Timken Steel is on the IBD 50, as well as Cleveland Cliffs. Freedom Holding, FRHC. Nice little flag breakout this week. Looking for another flag or just continuation. RSI is pegged at highs. Generac Holdings been moving sideways for the last couple of months as we enter hurricane season, looking for GNRC to break out of this pattern. Goldman and many of the larger banks being bought, looking for a follow through. Look at that volume. That's institutions. MACD above its signal line. Green Brick Partners with properties in Atlanta and Dallas, seeing a lot of activity. Looking for GRBK to follow through. Builders strength, especially if we see copper breaking out of the descending channel we pointed out previously. In mode, pushing off the 9, 21, and 50-day, RSI above 50, into an area of little supply, looking for a follow-through. J-Bull circuits from previous watch lists breaking out of a trending pattern with RSI rising, volume showing institutions have been picking up shares, while MACD remains above its signal line. I'd buy dips to the 9 EMA like we saw on Thursday. Moderna back on the IBD 50, breaking out to new 52-week highs last week, looking for a follow-through. Though I prefer a pullback to the 9 and 21 day, at least a 9 EMA, or maybe a pullback to breakout for an entry once buyers show up instead of chasing it. NVIDIA remains in its trend, telling us to keep an eye on semiconductors this week as well. Proficient, PRFT, looking very strong, bouncing off the 21-day, pushing off the 9 EMA last week, looking for 52-week highs. The company providing information technology consulting services to Global 2000 and other large companies. Earnings out of the way, with the most recent beat of 11.94%, plus 47% change in earnings for the month of March quarter, 2020 versus 2021. With $3.11 in earnings estimated for 2021. Progeny also looking very strong. PGNY looking for this flag to break higher. RSI is rising. Volume has been showing institutions have been nibbling away. MACD is above its signal line. Another one of those IBD 50 banks, SVB Financial Group, looking for a follow-through and a breakout to 52-week highs. Skyline Champion Corp, SKY, looking for a follow-through and a breakout. Gap and go. Draw a trend line through these lows. That's your stop. Looking for a follow-through. Volume suggests institutions were picking up shares on the gap and go. Riding the manufacturing of single and multi-section homes, modular homes, and park models as the trend out of big cities continues. Note sales and earnings increasing, and IBD 50 data looks very strong. With recent earnings beats of 336%, March quarter over quarter, 14 cents versus 61 cents in the most recent quarter. Volume increasing last week. Ultra Clean Holdings, UCTT, also playing the trend in semiconductors. UCTT manufactures gas delivery, chemical, mechanical planarization systems for the semiconductor industry group. Note sales and earnings increasing markedly, with the last report a 77% increase quarter over quarter. 52 cents versus 92 cents, a 40-cent beat going into June and July, with July being the seasonally strongest month of the year without question for semiconductors. Tiger also on the IBD 50 this week. Pretty interesting, looking for a follow-through, building the right side of a cup. Volume shows institutions have been picking up shares. MACD is above its signal line and rising, and RSI is above 70. Upstart Holdings, I know a number of you might be in this one, looking for the breakout. Still trending, pressuring for a break above 52-week highs. Volume shows institutions on the average have been picking up shares since about the first and second week of May. So I'm looking for that trend to continue or to be rejected back to the 9 and 21 day for an even better entry. And finally, Western Alliance Bancorp, looking for a follow-through. Many of the banks look very strong, looking for a push off the 50-day. This week, following Friday's volume, MACD's crossing and moving higher, and stochastics is also pointing to a bullish follow-through. RSI is above 50, looking for this stock to trade up to 52-week highs and potentially break out of this bullish trend, along with the big banks. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for June the 6th, 2021. Keep in mind, all of these stocks are set up properly, looking for a follow-through, at least the criteria that I look for as a trader. Price above the 9, 21, and 50-day moving average with RSI rising above 50, MACD above its signal line, and volume increasing. So be sure to check these out as well. as time doesn't permit me going through every single one of these charts. The watch list will be out later tonight around 11:30 on the East Coast, 8:30, maybe 9 o'clock on the West Coast. So be sure to check your inbox for that later tonight. Otherwise, have a great weekend, take care, and I'll talk to you soon.